first loss as a publicly traded company on Tuesday, serving as yet another reminder that no corner of Wall Street has escaped the ongoing financial crisis. The once revered investment bank said it lost $2.1 billion, or approximately $4.97 a share during the fourth quarter, representing the company's first loss since it went public in 1999. Few analysts were expecting the company to maintain its impressive run given the recent market turmoil across financial markets and the upheaval in the nation's financial sector. Still, the results were worse than expected. Consensus estimates were for a loss of $1.63 billion, or $3.73 a share for the quarter, according to Thomson Reuters. Lloyd Blankfein, Goldman Sachs' chairman and CEO, blamed tough market conditions for the loss. Weather-related disasters have caused damages of more than $100 billion worldwide in 2008, according to preliminary estimates by reinsurer Munich Re, reports Handelsblatt in the advance of its Tuesday edition. Of this amount, around $50 billion is insured. Peter Hope, head of the company's Geo-Risks Research Department, tells Handelsblatt. This figure could rise if December storms cause major damages, Hope says, including earthquakes. Economic damages have reached $200 billion this year. The researchers estimate making 2008 the second most expensive in economic terms after 2005. From an insurance perspective, it remains to be seen whether this year will also be more expensive than 2004 and 1999, according to the researchers. And in disaster news, a moderate earthquake with a preliminary magnitude of 4.7 struck southern Sweden on Tuesday, experts said. No injuries or damages were immediately reported. The U.S. Geological Survey said the tremor was centered 25 miles east of Malmö, Sweden's third largest city. The quake hit at 6:20 a.m., that's 5:20 GMT, and could be felt in Denmark's capital Copenhagen across the Øst Strait. Earthquakes of that magnitude are very rare in the region, experts have said. This is probably the biggest earthquake in Sweden since 1904, Uppsala University seismologist said on a Swedish radio. A group demanding that France withdraw its troops from Afghanistan claimed it planted dynamite found today at a major Paris department store, officials said. Interior Minister Michel Alliot-Marie said sticks of relatively old dynamite tied together but without a detonator were found in the Printemps department store, a favored shopping destination for tourists and a Christmas season attraction because of its festive windows. Police said the explosives were found in the third-floor restroom of the menswear department. Police and judicial officials said 5 sticks of explosives were found together. French news agency Agence France Presse said it received a letter from the group calling itself the Afghan Revolutionary Front, saying that several bombs had been planted in the store. Alliot-Marie said the group was totally unknown to police, but the claim was being studied. In the letter, the group demanded the withdrawal of French troops from Afghanistan before the end of February and threatened attacks if France refuses, said a judicial official informed on the contents of the letter. Officers cornered off the streets around the building. Anti-crime brigades and bomb squads were called in. However, further details were not immediately available. A Spanish official says an unoccupied hotel on the island of Mallorca has partially collapsed and at least one construction worker has died. Balearic Islands regional government spokeswoman Joan Barcelo says 3 other labourers who had been doing remodelling work on the hotel in the town of Cap d'Arpent were trapped under the rubble. Barcelo made the announcement while addressing the regional parliament in a budget debate. The Spanish Interior Ministry Office of Mallorca said it could not immediately provide details, but it confirmed there were no guests in the hotel at the time of the accident. Spanish national radio said police blamed the collapse on recent torrential rains. And now to our last story of the day. Citadel Investment Group is attempting to bolster its cash reserves by closing its Bermuda reinsurance business and halting $1.2 billion of redemptions from its two largest funds. The Chicago-based firm is also said to be exploring the sale of convertible bonds back to their insurers, issuers, among other trading strategies. Citadel's Chief Operating and Financial Officer, Gerald Beeson, declines to comment on trading strategies. The hedge fund operator, founded by Ken Griffin, took the unprecedented step Friday of suspending investor redemptions from its Kensington and Washington funds, which are down almost 50% on the year. Well, that was our final story of the day. We will be back tomorrow at our usual broadcast time with Frank Fortunato. Until then, thank you for watching and have a good day.